Welcome to interest.co.nz's morning briefing of what's news here and around the world. Everything you need to start the day in 90 seconds at 9 o'clock. Starting now with one of our more sobering editions. We have more stunning news overnight of the terms of the deal to rescue Bear Stearns. America's fifth biggest investment bank was sold to JP Morgan late on Sunday for $236 million, $2 a share. This is a company that earlier this year had almost $6 billion a year in revenue. The bank itself was worth $10 billion early in 2007. As recently as Friday, it was worth $3.5 billion. It's just been sold for $236 million. This is shocking. Shareholders have been wiped out completely. Now, this was all designed to avoid Bear Stearns going into bankruptcy. The US Federal Reserve is also providing $30 billion of financing for mortgage bonds that simply can't be sold. Separately, the Federal Reserve has agreed to lend to broking houses rather than just for banks. This is unprecedented, and some believe if the Fed had done this last week, then Bear Stearns may not have failed. This is the first time the Federal Reserve has done this since the Depression of the 1930s. The mood in Wall Street, put simply, is one of shock and panic. Interest rates on short-term government debt have plunged to lows not seen since the 1950s. The yield on US 10-year Treasury dropped to 3.32%. Said one trader, they're not buying these treasuries because they're looking for value. They're buying it out of sheer terror. So what does this mean for us in New Zealand? In the short term, our currency has fallen below 80 US cents as foreign investors pull their heads in and avoid any trades. But interest rates on anything that is not a US government bond are rising. We've already seen our fixed mortgage rates rise 0.5 percentage point in the last 6 months because of the global turmoil. So with more global turmoil, we'd expect more rate rises. That was 90 seconds at 9 o'clock. I'm Bernard Hickey for interest.co.nz.